Happy Fundrise Friday, all you Fundrise fans out there. It is Friday, the 21st of March, 2025, and I am coming at you with r/FundriseInvestors podcast episode 3. That's short for all of those who don't know, that's the Reddit, the subreddit, FundriseInvestors quote unquote podcast episode 3. We got a couple of housekeeping things that I'll touch on first, some admin issues. The last video, in my last video, episode 2, I was coming at you from my car in the parking lot of a fresh market grocery store. I said in there that 14% of my approximately $600,000 in total assets under management with Fundrise were in real estate growth. Because I was doing that from memory, what I accidentally did was combine the amount of IPO, lowercase I, internet public offering investment that I have in Fundrise with real estate growth to make that 14% figure. It's actually closer to 7.8. And long term, I hope to grow this conceptually. I'm not going to be too rigid with this, but to do what Ben told Financial Samurai Sam Dogan, not sure about the pronunciation, several episodes ago on his podcast when he was pressed by Sam. I don't think Ben was expecting the question, and credit to Sam, even though he's blocked me on LinkedIn, credit to Sam for putting the screws to Ben to answer the question. And Ben said 1/3, 1/3, 1/3, something like that. My words, not his, evenly distributed between real estate growth, private credit, and venture capital, which is the innovation fund, right? I have no idea how much thought or rigor Ben has put into that answer, but I also think it kind of makes sense to me. For lack of a better way to allocate your Fundrise portfolio, seems pretty reasonable. You've got an equal amount of assets that can benefit from a relatively volatile venture capital, private technology company investment holding, and you can still benefit from some income in private credit. And then you get to take advantage of the stability and sometimes volatility, depending on what interest rates are doing, how quickly they're changing. With real estate growth, well, because I started my portfolio early 2022, by far the smallest allocation in my Fundrise portfolio is real estate growth, and it's closer to 8% than the 14% I said. But on the subject of that mistake, those two assets that I was combining, which was the IPO, which is actually, you can kind of think of that sort of as a venture capital bucket, right, of asset allocation. It's just much more concentrated directly into Fundrise and their management team than the innovation fund, which is distributed amongst amazing private technology companies. I'll just rattle some off, like Databricks, ServiceTitan, which is now a publicly traded company, right? OpenAI, Endural, Vanta, Canva. Can I think of one more? I can't think of one more. Anyway, so long term, I'm going to plan on maybe striving to get that 1/3, 1/3, 1/3 distribution of my portfolio between real estate growth, private credit, and venture capital. But I'm nowhere near that now. It's closer to 2/3 private credit because of the opportunistic credit fund. Maybe 20% venture capital if you don't count IPO with the innovation fund, plus another about 7%. So that's like 25%-ish. Venture capital, and then the rest is real estate growth. And so last few things with housekeeping. Episode 1 of this quote-unquote podcast was over 54 minutes long. It's had 68 views, 4 comments, 2 of which were by me. The other 2, I actually asked the people to make the comments that made the comments, and 0 likes. So, haters be hating, that's fine. Episode 2 is it's a little over 7 minutes long, which I posted 1 week ago today from my car. It's had 152 views, so an uptick from 68 to 152. I'm hearing you guys saying shorter is better, I get it. 1 comment, And that one comment basically was saying, to paraphrase, wow, you sound and seem so normal. I thought you were autistic based on your Reddit behavior. And I responded to that in kind. And 3 likes for that one comment by the person saying that they thought I thought that I was autistic, and 4 for the video. All right, that's enough of housekeeping. We got some notes here that I'm going to try and cover to try and stay a little bit more structured. We'll see if you guys like that or not. First thing I wanted to talk about is the app user interface, the UI update, which has kind of quietly happened over the past week or two. I haven't talked about it. I haven't posted about it. But for me, what I think about it, it's just more of the same. Fundrise keeps doing what they do, in my opinion, which is incrementally compound growth. The app just keeps getting better. The user interface just keeps getting more beautiful. It keeps getting better organized, more succinct. When I post my quarterly updates, I guess this last time I didn't do it because I feel like it wasn't really getting the traction that I hoped it would get. But at the bottom, I would post a wish list, and I would carry that wish list from quarter to quarter, and I would pay attention. Well, what changes are being made that are relevant to my wish list, and what changes aren't being made? And I started to think maybe I would take a break, take a little pause from the wish list. One of the items that I would carry on my wish list was to minimize the white space in the charts. And, like when my account value graph of approximately $600,000 is graphed in the app, there's like a $200,000 white space, which I don't like. I want to see all of that real estate, all of those pixels taking up all of the data that I have that Fundrise is displaying. Anyway, there hasn't been any change to that. But what there has been is kind of a consolidation of all the information into one screen, or a screen you can scroll up that you used to have to shift between screens to find. The notes that I have here are, there's more prominent, okay, one of the aspects is there is a more prominent performance breakdown table. Like it takes up the entire screen if you go to the performance breakdown table. I like that. I don't know if there's additional information, but I think it's more prominent. There might also be a little bit more information in there. Also in the upper right-hand corner, and again, I'm on Android, so I have no idea if it's this way for you guys on iPhone. In the upper right-hand corner, there's a little quick access button to the account value. From that screen. And I think that's whatever. I don't think it's necessary, but take my opinion for what it's worth with a grain of salt. Something that I don't like about the new update is that all of our account value charts, as far as I can tell, are now more smooth. So we used to be able to switch, depending on how far back in history you go, from daily changes in account value or weekly or monthly, if I remember correctly. And now those options are gone. And I think it's only monthly based on how smooth the graph is. And I don't like that. I want to see as much detail as you can show me, Fundrise. So I would appreciate it if you would switch back to daily. I want to see those stark contrasts when my dividends were paid. Account value goes down, but so does also net contribution probably. If my dividend was paid to me and not automatically reinvested, that's going to decrease my net contribution, if memory serves me correctly. And then when I make a new investment, my net contribution goes up, but so does my account value. And I like to see those stark contrasts. I like to be able to mark those milestones more firmly, I'll call it, instead of smoothing it out, which just feels to me like it's sort of airbrushing the details. What else do I have here? That pretty much covers all my notes about the user interface, as I'm calling it, update. The next item that I have written here that I wanted to touch on that I haven't previously touched on is I posted about it, but I haven't spoken about it. I highly recommend Onward episode number 44. It's the most recent episode. Ben is interviewing a gentleman named Kerret, Kerret. He is the president of Silverstein Properties. And this company owns the World Trade Center in New York City. And Ben previously, in a much earlier episode of Onward, interviewed I'm from memory here, the founder and CEO, previous CEO. I don't think he's the CEO anymore. I don't know. Gentleman's in his 90s. I think his name's Larry Silverstein, as in Silverstein Property Silverstein. And I really enjoyed that episode with Mr. Silverstein way back when, but it wasn't my favorite episode. At least I wasn't calling it my favorite episode. I was sticking to my guns that episode 10 was my favorite episode, which is where we learned the phrase turtles all the way down. Well, this episode 44 with Tal Kerret, hopefully I'm pronouncing his name correctly. Man, it just hit on all cylinders. This guy is so impressive. He's obviously an amazing leader. I mean, what is this company doing? This company owns, this company built, this company bought the Twin Towers weeks before the September 11th terrorist attacks, and rebuilt the World Trade Center, which is more than just an amazing world-class piece of architecture that is the Freedom Tower, but it's also the rest of the World Trade Center, other incredibly impressive billion-dollar buildings. And they're still working on building them. And I mean, how much more impressive does it get? And this gentleman, Tal Kerret, is on the board of directors for Fundrise and has been for a decade plus. And what more do you need to know? Listen to this episode and then just be impressed, because I certainly was. I love it. A little bit of a tearjerker. I said that it blew my mind and melted my heart, and I can't give my money to Fundrise fast enough. I can't do it quickly enough, right? And it's true. That's just how I feel. All facts are friendly. Next note I have here is about my portfolio updates. So we got a new one coming, right? The end of Q1 2025 is the 31st of March. Today's the 21st, 10 days. Hey, all you haters and ain'ters who want to liquidate for, whatever reasons you want to liquidate, you got to get your redemption requests, I think is what they're called, in before close of business 31 March. I don't hope you do it, but if you're going to do it, that's when you need to do it by, so that Fundrise can process those and get you your redemptions by about 9-10 April, approximately. That date sticks out in my mind because that's usually when I post my quarterly updates, by about the 9th or the 10th day of the new quarter. So my previous update, January 9th, 2025, was Q4 2024, was a $600,000 update. And what I have to say about that is, periodically people reach out to me with questions about my asset allocation. There is nothing that you can't possibly want to know about my Fundrise portfolio that I don't publicly post transparently at great cost to my personal privacy and financially sensitive information, but I do it to hopefully build trust and transparency and rapport with this community that I want to be a part of and I want to help grow, which is OG and new G Fundrise investors who are passionate about the company and are how is it that I phrase it? Unapologetically supportive of Fundrise and CEO Ben Miller and Fundrise team. So we got a new update coming. I guess I'm going to post it in about 20 days. And I'm going to call out right now the section, the only part of my updates that is truly my creation, because the vast majority of it is screenshots of Fundrise's beautiful software that I've already touched on a little bit, are 4 graphics, 0, 1, 2, 3, and then the source data, which is an Excel spreadsheet snapshot that feed graph or chart 1 and 2. So chart 0, which I produced last and then named it 0 so that I didn't have to rename all the charts. Chart 0 is my cumulative net performance with Fundrise. And it goes back, I think, to maybe 5 or 6 quarters, which I've been with Fundrise 8 or 9 quarters. So it doesn't go all the way back, just because the first couple of quarters, I don't have all the data, because Fundrise didn't show us cumulative data the entire time I've been with Fundrise. And it also wasn't that interesting in the beginning. There wasn't much change. So my chart 0 transparently shows my cumulative net dollar figure performance, total return, and it shows my cumulative percentage. Let's see, net total quarter by quarter performance, and it shows my annualized net return quarter by quarter. And so that might be interesting to you, but the thing that sticks out for me, last post on the 9th of January, I had $84,000 of total cumulative, sorry if that's redundant, of cumulative net return. And as of today, it's $94,000 and change. So I know my bar graph, my bar for the upcoming post is going to be about $10,000 more than the last bar was. And that's over 10%, 84,000 plus another 10, you know, at 10% is 8.4 thousand. So, hey, I like it. But we'll see if anything in the next 10 days, calendar days of the quarter changes. We'll see what happens. You know, innovation fund could go relatively dramatically compared to the other asset classes, up or down pretty quickly, as we saw in Q4 24. You know, I think it's called total net return for all investors in innovation fund in 2024 was approximately 12.41%, if I didn't nail that specifically, for the entire year. And that's for the investors, not for the fund. Almost all of that came from Q4 24. And so far, Q1 25 has not continued that trend, which is neither here nor there. It just is. And so, you know, the reason why I bring that up is there might be enough time for something exciting to happen in Q1. Otherwise, I'm just going to keep getting the $128.10 per day on average in dividend I earn, 99.9% because of the opportunistic credit fund, and the rest of it because of the real estate growth funds and E-REITs that I'm in. And so that's only another $1,280-ish bucks that my Q1 net return could potentially provide if the innovation fund doesn't surprise to the upside. Excuse me. The last thing I wanted to touch on is something I already posted about this morning on Reddit within the subreddit FundriseInvestors. And I posted my second post recently from the Joseph Carlson show, about the Joseph Carlson show, about the guy that is a very impressive entrepreneur, software engineer, YouTube financial influencer that I'm a huge fan of and blocked on all of his social media outlets, Reddit, Twitter, LinkedIn. He posted a video recently that I just watched today. I watch almost all of his public videos, talking about 4 value investments that he says are undervalued. And just like similarly, when I listen to this guy talk and I read and I listen to what Fundrise CEO Ben Miller says and writes and his team, just like with Joseph Carlson, when he talks and when he writes, I pay attention. And why is that? Because it earns me return on investment. I have generated a tremendous amount for me, everything's relative, a return on investment because of these 3 gentlemen's content. So I pay attention. And Joseph produced this video and I posted it. The 4 companies that he's saying are currently value investments, so not growth, but value, which for Joseph Carlson is kind of one and the same, because I don't think he considers any growth company a value. I don't think he considers any value company a value company, unless it is also a growth company, if you can follow that. Forgive me if I'm not explaining that very well. And at least it's not something that he would put into his personal portfolios, and of which 2 he publicly, transparently puts on display for everybody to consume, to learn from, which is a big reason why I'm doing what I'm doing right now, because I'm sort of following in his footsteps. This guy's footsteps a little bit, and Joseph Carlson's footsteps. And the 4 companies that he mentioned were Uber, Adobe, Nike, and PayPal. I think he, quote unquote, is recommending, but not recommending them in that order, because he doesn't make investment recommendations. He's just sort of providing his opinion about the hierarchy of what he thinks, even though he isn't putting any of his money in those 4 companies, he thinks that's number 1, 2, 3, and 4 best to first to 4th place value growth company that's undervalued right now. And why did I post that in the subreddit Fundrise Investors sub? 8 minutes and 30 seconds into the video, he says something like, I wrote it exactly what he said, Canva is a similar to Adobe Photoshop product that is taking a lot of Adobe customers. Hello, what could be more interesting to a Fundrise Innovation Fund investor? So that got me fired up, and I couldn't post that fast enough. Stopped the video, paused the video, re-listened, thought, oh, what did he just say? Wrote it, posted it, and here we are. So, all right, how long are we in? We're 20 minutes and 50 seconds. I wanted to stick closer to 5. Hopefully you guys think that these videos are improving. Feel free to give me feedback. Please do. Positive or negative. All facts are friendly. Constructive criticism is welcome. Unconstructive criticism is welcome. In the Fundrise sub, cynicism is not welcome. Support for Fundrise is welcome. If you offer a fact that is not favorable or flattering for Fundrise, that is not going to get deleted by me. It's not going to get applauded by me, maybe. I'll give you an example of what I mean. I just dawned on me that I didn't go into further detail about what I was trying to talk about earlier with my quarterly post and those four graphics that I created. I want to take credit for it because 99% of my posts are created by Fundrise that I just capture and regurgitate. But those 4 I created kind of painstakingly, iteratively over many posts. And so I touched on the first one, chart 0, which is my personal performance. Chart 1 is the Fundrise Investors performance by fund, which is not the same thing as the fund performance. Fundrise Investors performance by fund has to capture the fact that investors come into and out of funds. I think they can only really do it 4 times. No, we can come in 365 days a year-ish, something like that, almost any day. We can only exit the fund about 4 days a year, right? And so if somebody makes a massive investment 6 months into the year at a particular fund, and because of the timing of that investment, let's say it produces, let's just call it a 10% return on a massive investment for 6 months, that's a 20% annualized return. But the fund doesn't necessarily have to return 20%. I haven't really thought this through. This is definitely spontaneous, off the cuff. You get where I'm saying. The fund return, if the fund return is 20% for the year, then that's going to be a hypothetical investment that's made on January the 1st, and also, I believe, all dividends reinvested, which isn't possible for all the funds. Sometimes it's not possible for, some of these funds, I'm calling them funds, but they're E-REITs, and there's a distinction between E-REIT and fund. But for all, splitting hairs are all funds as far as I'm concerned. There's 14 of them. The opportunistic credit fund, of which almost 2/3 of my assets under management with Fundrise is in, has never been automatic. It's to my great frustration, but that's my luxury to be frustrated by it, because Fundrise is doing the real work to manage this very impressive and successful fund. Anyway, I've never been able to automatically reinvest my dividends, to my, again, great frustration, because when I planned to do this investment, I made the assumption, knowing that it might not be possible, that I would be able to do DRIP, D-R-I-P. What is that? Dividend Reinvestment Plan or Program, something like that, which allows you to turn a 13% annual dividend distribution rate into more than 13%, because if you can automatically reinvest your dividends, 3/4 of a year, one dividend is providing return. And for half of the year, one dividend is providing additional return. And for 1/4 of the year, one dividend is providing additional return, and on and on. You can do that for years. And so anyway, I'm losing you guys, I'm sure, because I think I'm losing myself. But here's my point. If you guys want to criticize Fundrise and not get it deleted by me, if you take a look from, I think this is going to be left to right from y'all's perspective, at the worst performing Fundrise funds, which are the Development E-REIT, West Coast E-REIT is down there, and another one that I can't think of. They're not all concentrated in California, but almost all of them are. The worst performing Fundrise funds are almost all, I'm not even sure if that's the right way to describe it. They have a considerable investment in California properties. Well, hello, wake up, California progressive suicidal empathy. You're not helping your communities. You're not helping investors. You're making it harder for competent, successful, ambitious, good quality companies like Fundrise to make an investment in your state, and for people like me to make investments in their funds and see return on investment because of the policies like letting criminals run loose in streets or I'm going to call it unhoused people with cynicism, but homeless people to break into their properties and not do anything about it. Wake up, people. Come back from La La Land in LA and the California self-defeating policies that you guys implement. And it seems like maybe for former governor or mayor candidate Rick Caruso is kind of giving Californians and LA folks a wake-up call to pay attention to what works instead of ideology. Sorry for this political rant. I don't want it to be about politics. I want it to be about return on investments. Here we are, 26 minutes in. All facts are friendly. Anyway, if you guys say the worst performing Fundrise funds do terribly, I'm not going to delete that. That happens to be true. But what also happens to be true is the best performing funds, Fundrise funds, do great, in my not so humble opinion. And so all facts are friendly. Healthy skepticism is good. Cynicism is bad, and we'll get it deleted from my sub that I want you to be a part of if you're an OG, potentially new G Fundrise fan. And what's the last thing I say? All facts are friendly. Healthy skepticism is good. Cynicism is bad. No whining. There's no whining in the casino, and there's no whining investing, at least not around me. We make informed decisions, and we stick to our guns, and we adjust as the future unfolds. And the last thing that I write in the FundriseInvestors Reddit sub is have fun. That's what I'm trying to do right now. That's what this guy's doing on this shirt that a very good friend of mine made, and this Barstool Sports sticker that I got when I bought this Barstool Sports flag that's eventually going to be on a flagpole underneath an American flag in the front of this rental property, which has been a nightmare for me that I'm living in. Anyway, happy Fundrise Friday, fam. Happy Fundrise Friday, fam. Hope you guys have a wonderful weekend, and I'll talk to you later out here.